Dustin here, financial advisor with Jazz Wealth Managers. Today we're going to talk about how to eliminate fear from your retirement. I get this so often when the markets go down, people go, oh man, I'm going to lose it all, what do I do? Well, let's help you with that. The first thing you can do is not invest directly in stocks. Now, that's not a bad thing, right? You can invest in like Apple or Facebook or something if you like, just spread out. Don't invest all your eggs in one basket. See, what happens is people tend to go, I'm going to invest in some, I don't know, Bitcoin or something, or some random one-off stock. And that exposes you to a lot of risk. Of course, that one company can go under or have a severe pullback. Just look what happened to Facebook. So the first thing you want to do is look at exchange-traded funds. These are baskets of stocks that really can't go to zero. See, if one company in an ETF goes bankrupt, well, the ETF might take a little hit, but it's not going to disappear. All of the companies inside of that ETF would have to go to zero. A good example would be like the S&P 500. There are many ETFs for the S&P 500, and it's just a basket that holds all 500 stocks with different weightings. So, if an S&P 500 stock that has a bad day or a bad month or goes bankrupt, it doesn't matter. There's 499 others to make up the difference. And so for that reason, you would look and say, well, I'm not very fearful that that is going to happen. Maybe one or two have a bad quarter or go bankrupt or whatever, but not all of them. Think of what would happen to the world if the S&P 500 went to zero. The next thing I want you to keep in mind is that the stock market has recovered from every decline in history 100%. So 100% of the time, the stock market recovers from any decline that it has. So if you're invested correctly and you have enough time, then who cares if the market falls for a month or a year? You know that it's just a matter of time before it recovers from all of that. It has done that 100% of the time. In going back to the Great Depression, it's not my opinion. That's exactly what happened. So even if one day is down, you can say to yourself, well, I know we're going to recover that one day. Maybe not tomorrow, but we will eventually recover it because statistically, 100% of the time they do. All right, we're going to keep this short. So the last thing I want you to keep in mind to try to eliminate the fear from retirement is to contribute weekly. Now, this is a bit of fear and greed that I'm trying to get you to sort of focus on here. What happens is, if you contribute every month, let's say on the first of the month or the first market day of the month, well, you watch the markets go up and down, and throughout the month you might be going, darn man, I wish I would have bought down at this discount and now the markets are higher, or maybe the markets are trending higher and you just want to get in. Well, what we found is that if you go back over time and you say, what if I contributed every week? Doesn't matter the day, but if I just contributed once a week and I did that smaller amount, so rather than $200 a month, I'll do $50 a week, what would happen then? Well, actually, we've done a couple of great videos on this. If you go back in time, you actually have a better result in the long run, assuming a 30-year window. You end up with a better average cost, which means you end up with more money in your retirement account, all because you didn't contribute monthly, you broke it down into a smaller amount and contributed weekly. Now, we can invest our clients weekly, daily, monthly, however they like, because we don't pay trading commissions here at Jazz Wealth. Our deal with Folio, our brokerage firm, we love Folio. It's been like the greatest partnership for us, is that we don't pay trading commissions. So if you want to contribute to your account every single week and we buy 6, 7, 12 different exchange traded funds, you're not paying the typical $7 a trade or $5.95 or whatever it is. You pay zero. So we can adjust, we can deposit, we can make new positions, we can take old positions out, and you won't pay anything. Another reason to eliminate some of the fear from your retirement. So when it comes down to a bad market environment or something happens, I want you to keep a few things in mind. If you're invested correctly, if you have enough time until retirement, if you remember the statistic that the markets recover from every decline in history, and you contribute on a weekly basis, you're going to be just fine. Nothing to worry about. Well, now that you're not worried, maybe you'll want to watch this video over here. Really, really cool. I love how this works out. This is how 13.4 is the moment in time where your account takes over your contribution.